Thank you, Traders Exclusive, for having me. John was kind enough to invite me back. This is my second time here, and so many good presenters that Traders Exclusive brings. So it's an honor to be here today. And of course, I'm here to talk to you about my favorite topic of all, gaps. My name is Melissa Armo, and I own a company called the Stock Swoosh LLC. If you have any questions about the information you see here today, you can email me at melissa@thestockswoosh.com. So let's get started. The topic of today's discussion is called the gap fill fallacy. I've been wanting to do a webinar on this for quite some time. And here's a great picture I used. Do you want to get eaten alive? The answer is no. So don't throw yourself in the alligator's mouth by trying to do gap fills. Why? Because the trend is your friend. I didn't invent this, okay? This is just something that everyone knows. The trend is your friend. And so you have to find the opportunity when you trade in the right direction. People, for some reason, are in love with the gap fill fallacy. I have no idea really where this ever started or originated, but people really, really love this idea. However, it is false. It is what I call a fallacy. People are in love with the gap fill fallacy, but it doesn't make sense. Why not? Because big money, which moves the stock price, and that is what moves stock prices. And if you ever want to know what the direction is for a stock, all you have to do is correctly read the chart and the current trend. The price will reflect what is happening with a stock. And the price is telling you what is really going on in the stock and nothing else, nothing else. If you are playing a gap to fill, you are playing against the trend on the daily chart. And therefore, it's dangerous. So why do gap fills not work? Gap fills do not work for multiple reasons. I could talk about this all day, but I only have 30 minutes. The largest and most important reason that gap fills do not work is because the way to make money trading is to trade with the trend. Why? Because large institutional money is creating this trend. And as a trader, you cannot trade against that kind of institutional money. I'm talking about hedge fund money, banks, huge money that trades in stocks that have positions that are making those momentum moves that are setting the trend in the first place. And if you want to make money, you must be with this big money. As an individual person, you've got to be with that to make money. And if you can be, it's very easy to make money. When you're against it, it's tough. And that's what doing a gap fill is. You're against that. Big money can decide to change the daily trend in the form of a new gap. However, this is called a corrective gap. This is not a gap fill. It's a new gap, or what I call a golden gap that starts a new trend. In other words, a stock is trending in one direction. Then you want to do something like a gap fill, and you're against the trend. That's a no-no. But there are times when a gap does a corrective gap that changes the trend. And in that case, then, I have a system where I rate the gap to make sure if it's a good one, a corrective gap that is now going to change the trend from going up to down, for example, and therefore you can play it. And we're going to go over some examples. It's dangerous doing gap fills against the trend. I mean, it really, really is, because at any point in time, boom, the big money can come in and just flip you out. And if you trade with any amount of size, this is very dangerous. Here's a beautiful example of why the idea of playing gap fills is totally erroneous and a fallacy and does not work. This was the best example I could find right now for this presentation today. This STP at one point back in 2008 was up here over 88 bucks. It's worth 44 cents today. If you were doing anything with this to fill any of the 1,000,002 gaps that happen all along the way here in the last 5 years, you'd be broke, okay? The trend on this at some point started down, and it was never going to fill these gaps, and it never did, and it never did, and it never did, and it's worth 44 cents. So why does this happen? Well, you know, you never know why something decides to fall off a cliff and be worth nothing. But this is a great example of why it's dangerous to do this. So the idea of gaps filling themselves is a fallacy. What does this mean? It means people think that if the stock gaps, that it will go in the reverse direction and fill it. And this is what I was talking about earlier, that people are in love with this idea. I think people are in love with this idea because it's easy for them to understand. It makes sense. Oh, there's a void and it's going to fill the void. Yeah, okay, that makes sense. But that's not the way it works. And that is also not trading. And anyone that trades should know by now that trading and making a lot of money trading is not easy peasy. It's not as easy as saying, oh, there's a void, it's going to fill the void. No, it's not like that. That is not how it works. However, the concept of trend trading is actually very easy, except for people get tripped up with gaps. And yet, if you know how to play gaps, they can be very profitable. You just have to learn how. Some people think that these gaps will fill into the price from the prior close, but this is a fallacy. And if you want to trade and make money consistently is the key word, then you need to trade in the direction of the gap. If you trade believing gaps will fill themselves, you will go broke waiting for them to fill. So why suffer like this? Just learn how to trade gaps correctly. They're very profitable. They also can make money very fast in the morning, and by 10 o'clock. There's no reason to do anything other than play the gap in the right way. So let's talk about some examples here. This is the golden gap, what I call deck. This had the first bearish gap back here in November. See this guy? Of 2011. This was beautiful. And if you thought this was ever going to fill any of these gaps or traded any of these gaps that I was shorting, by the way, do you see how these do not fill themselves? Will it fill itself someday? Someday? Maybe. SDP is never going to fill some of its gaps. That's not the way to make money. The way to make money is to rate the gap and play it in the direction of the gap and the direction of the trend, which, by the way, this was the first one here. You have to know how to pick this guy and rate it and play it. But if you got this one, you knew this was a good one, and you knew this was the first one to change the direction of the stock going down. And yet, some people would have looked to play this one and 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 this one. They would have looked to play them as gap fills because they would have seen this void that people are in love with. People are in love with this, but it is a fallacy. And it also is not the right way to make money. And not only that, it's dangerous because sometimes people just can't get off of it. And you know what? That's what creates these big, big bars that keep going then. And also all of this that keeps going. It actually, these people that keep trying to buy these dips and buy these bottoms, which again, that picking bottoms is a fallacy idea as well, creates the push down, down. It actually helps them down because then people eventually will take it off and get stopped out, or eventually get out, and then they're in so much pain and they're suffering. Why suffer? Do you know if you took this first gap here, you never suffered. You never suffered. Here it is, a clearer picture. This ran up, was in an uptrend, ran up and broke out into all-time highs. As soon as it broke out into all-time highs in deck back in 2011, ran up, couldn't go any higher, did a topping tail, was red. Does that mean it's over? Does that mean it's a top? No, no, no. You don't know. But then it gaps down this day here, and you rate the gap. And actually, this was a very good gap. I was the first one to get in. If you wanted to short this as a swing trade or core trade or play it as a day trade. But either way, if you're a day trader, you're playing all the gap downs that rate well, not as gap fills, but in the direction of the gap. And look, even here, these people were bottom feeders, trying to think, oh, it's going to go up, it's going up, it's touched a 50-period moving average, it's going over the red bar. No. This was a great gap this day. And you see how big this was because it fell into it because all these people were crushed that were picking this bottom in here. Here was an example if you did a swing trade on this. Now, I day trade, but the gap strategy I teach can be used for everything. It's that powerful. The rating system that I teach. The entry, and I used a roughie at 110. You know, the price was like 111, the top of that bar. We'll go back and look at it. If you risked $500 because the stop is over the bar, the first high of the first day of the first gap, and if you stayed in it to the target, it actually went past $44. I'll show you where to get out. You could have risked $500 and made $33,000. This is a trade that would have taken you 16 months. But this is 66 times the profit of the amount you risked in just one play. This, and zero suffering, this is how you make money in a gap for swing trades. You do not do it as a gap fill. You make money by playing the correct direction, which in this case was down, based on the quality of the gap. And even if you took any one of these multiple ones, any one of the many, 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 many gap downs in this chart, playing it in the correct direction would have made you profit. So the exit on this, here it is. Look, you put the stop over the high of the bar of the first day of the very first one that changes the trend. And it never went over it. And you get out here. This is a bullish gap up here. This is where the exit would have been. Now, if you could have gotten out here, but how would you have known that? You're in this thing for a while. You have to have certain restrictions and requirements for the target. The target actually was 50 bucks, but then it went through this here. So you could have gotten out of it down here. However, after this bullish gap up here, after this starts to scoop, you got to be out. Now, where is this going to go from here? I don't know. I will say, though, that this chart has not fixed itself and done a corrective gap yet. I wouldn't play this gap long. If I was going to go long this stock, I wouldn't be in this long yet. But you get out of this for the short trade here, because this might be the start of something. So, and also you're up a ridiculous amount of money. And even if you had just risked less than that, like even if you'd only taken 200 shares, that's it. Let's pretend you only took 200 shares of this. And by the way, when you're doing overnights, it's 2 to 1 anywhere. So you have to be able to handle doing this. But again, this is a swing trade. So it's 2 to 1 leverage. Even this, you would have made this much money risking 200 bucks. How? Not by doing a gap fill, by doing a gap in the correct direction of the chart. And it's no suffering. I say no suffering because you're not suffering through wigglies and jigglies and questioning yourself and questioning yourself. You rate the gap, it's good, you take it, 100% conviction, you do it. And even if you take a late one and it comes back up on yourself, you don't question yourself. You rated the gap, you know about this one's good, say you miss this, you take the next one, and so on and so forth. And none of these have filled themselves, by the way. They're beautiful. This is a beautiful chart. And I could show you 1,000 of these. I could talk all day, but John won't let me. So you've got to acquire the proper knowledge through a class in order to learn how to do this. This is just one of these things. People are in love with gap fills because no one needs to take a class to say, oh, a gap fill is something that fills a space in a void and it reverses. Okay, well, fine, but they don't work. People love the idea, but it's a complete and total fallacy. It's totally erroneous, and not only that, you can hurt yourself. You can actually hurt yourself getting in these trades in the wrong direction, and yet people are in love with it and won't get off of it, and that just helps someone like me make money, more money, doing the correct thing, because it pushes those people out, because it's going to push through another level, and it's going to push through another level, and it's going to keep pushing. So I teach a class on how to rate these gaps. I call them golden gaps. That's a name I created, and I call them golden gaps because it's like finding gold when you find one like this. In fact, I made money shorting CLF this morning in a bullish power trend market, and the market blew up today, which I knew it was going to flip and reverse. And you know what it did? Way sooner than I thought, and I made money shorting today in a power trend market. Why? Because I was in a good gap, a golden gap. The Golden Gap course teaches a 26-point rating system to find the best gap to play each day. And all 26 points are based on the daily chart of a stock, based on the price. And these points use math and science in conjunction with technical analysis to analyze the price patterns to choose which stock symbol and gap to trade on the day. Imagine if you had seen that, if you had gotten that STP on the first gap. Imagine. 26 points is a lot of things to look at to rate a stock. It's a very detailed system, and this is the reason the Golden Gap course is so special, because it narrows down quality with a microscopic look. I know not everybody wants to do that, but you must learn to do this to get an edge in your trading, and you definitely have to do it if you're risking, real money trading. You've got to do it. So how can you play gaps to make money? Number one, learn how to read the correct direction to play the stock, which is the trend. Learn how to read charts with precision. Learn how to pick which stock symbol to trade. You've got to qualify it. Learn how to enter the trade and exit it properly as well. This is very important. And learn a consistent and profitable strategy. Learn what side the money is on the day of the gap so that you can trade with the large money and therefore profit as an individual trader. As we are so lucky as individual traders, we don't even need a lot of money behind us to make money, because that big money that's behind us, we just go, we just get on the tail of it, and we can get in and we can get out. When big money is in a certain direction, if it wants to get out, it doesn't press a hotkey and boop, and it gets all out at the same price. It gets out at a million different prices. It can't get out at one click of a button. It's a disaster if they're in the wrong way, or they got to get out of something, or they have to do something, like if earnings go down and the big money is in something long, they got to get out. And that's what creates a big push down in some of these gaps, and you'll see them the day of the earnings when they flip. So you've got to learn where the big money is and to play with it. And that's the great thing about being one individual person sitting behind your desk at a computer. You can still make good money trading because you can be nimble, but you've got to get it right. This is the most incredible, beautiful, beautiful chart. And what an example, talking about getting something in the right direction, the direction of the trend, to make a lot of money. If you were long Apple for years and years and years and years and years and played every bullish gap up, the good ones, you made money. If you hung on to this thing for dear life and wouldn't get off of it, or by the way, also picked bottoms, which I've been talking to people that have been doing, you've gotten hurt now. And you know what? Apple's doing exactly what I thought it would do. It's making another leg down. I actually have people I've been talking to about this. They finally are out. People were picking bottoms, and I said, it's going to make another leg down. And now finally they're believing me and they're out. People were picking bottoms in here. Picking bottoms in here, this was the day of the earnings. And crushed. Then people were picking bottoms in here. And look at this. Everybody got excited. Two people I was talking to, they said, oh, it's over the 50 pre-moving average. So it's getting ready to make another leg down. And look, it did. It is. It's going. The target on this, the next target is 400, 350, 300, 275. I can name a million. We'll see what it's going to do. But this thing is in a downtrend. And this thing is not a buy in any planet, in any universe, until you know what it does? You know what this thing has to do actually to correct itself? It has to gap all the way up to here. It's a biggie. That's what it has to do. If Apple gaps up to here, it's not a buy. If Apple gaps up to here, it's not a buy. If Apple gaps up to here, it's not a buy. Apple has to gap up to here, and it's not a buy until then. All right? So if you got this first, beautiful, fabulous bearish gap, which by the way is green on the day, but still it was good and real. And how would you have known that? Well, first of all, you rate it based on my system. Second of all, when something's rallying up like this, you probably had $700 at least for some kind of profit-taking target if you're in this for a while. It goes up here and boops, a little bit over 700, comes down, goes a little bit, retests almost, this is a top, this is toppy. And then it goes red and can't get over it. As soon as it gaps down the next day, you're out. Out. If you're in long this long, you're out. This is a sign. First of all, you rate it. If it's good, you got to get out. Second of all, this is a sign. Top, over 700, gap down, out. And that was the first one. Look at this. Now, you have to have an account to be able to do this kind of thing, but it went then hard red the next day and has never seen the high of the top of this gap, just like deck. Now, is Apple falling off a cliff? Is it a terrible company? No, no, no. Apple will probably be worth $1,000 someday. When? 10 years from now, 5 years from now, 3 years from now? Are you going to keep picking the bottoms and insist that you're going to fill the gap and go broke waiting for that to happen? No. Take the real trade that's supposed to be taken, or wait for this real trade that's supposed to happen to buy it. Do the one that is either in the direction of the trend and changing it, okay, which this was a change in trend, one right here. But then you could have actually shorted everyone down all along. But the deeper into it they go, the more they wiggle and jiggle. So you have to suffer through rallies. And you've got to have conviction to suffer through it. But you know that it's fine and good since the first one, unless it does something to flip it. And what is that? It would be a quality golden gap, bullish gap. And that would have to be all the way up here based on this chart. So this is really tripping a lot of people up. Really tripping a lot of people up. People are losing all the way down on this. And you know what? That's pushing it down even more. It's pushing it down even more. What would you do with this if you saw this? Where do you think the side is the big money is? There should be no question in your mind. You shouldn't even have to think. Go. What? Where's the money? Down. They're selling out. They've been selling out. And actually some places are shorting it too now. You know, you've got to just look. This isn't rocket scientists. You play with the trend. The trend is down in Apple. You can see it. It's clear. Now, this you got to learn, okay? But there's a reason to learn this. It's very important. because it's going to help teach you what to do with the rest of this as well, and to play it on the day, and to get in these positions, and then not to do something like this, which is try to buy into these dips. This is so powerful here. Look at this. This try to come down and ran up. Try to come down and ran up. Try to come down and ran up. Ooh, it's over the 20. It's up to the 50. Look at this big green bar. Boom. Got right down after it fell. Boom. Earnings got them right down after it fell. And continues to fall. And it's going to make another leg down here now. This is not a bottom. This is a top. This is not a bottom. And this is the kind of stuff you have to learn, and why you've got to learn how to be skilled at reading charts, which I teach. This is a top because it tried to go up and retest a number, couldn't get over it. Then it tried to go up and retest a number, couldn't get over it. This is a whole number also up here at 700s, had a huge rally up. Eventually people will take profits. Also this bar is red. Then it gapped down. This is not a bottom. Just because something does a higher high and a higher low and a lower low and a lower high, that's not enough information to trade. It's not enough information to make money on a consistent basis. And the idea of filling gaps will never ever work. And if you want this to fill this gap all the way back up here or here or here or any of the other ones, you'll be broke waiting for it to happen. Don't suffer like that. Take a good trade, make money, and book it. And if you're in a bad trade, you know what you should do? Take it off. Take the loss. You know, I had to talk people out of this that are in my room about taking this trade off for months. Actually, we were talking about this since January. Here, people were picking the bottom in here, and then they were down in here, and then they were swearing to God they had to wait till it came back to break even. What if it goes down another $100? What if it goes down another $200? What are you going to do then? Again, Apple isn't falling off a cliff as a company, but right now you should not be in this as a buy. It's a short, and actually a very profitable short if you took this gap. So, you know, learning how to do this is so powerful for you to make money as an individual, because you're going to get in this thing before the big money pushes it down. What is the clue? Clue, top, clue, top, clue, whole number, clue, gap down. You rate the gap. Ooh, that's a goodie. I'm going to get in a little bit there. Ooh, there it did again. I'm getting a little bit more. Ooh, I'm getting a little bit more, and so on and so forth until you just write it down. So it's easy to make money once you have a complete system. You just have to find one or learn one from me. Your path to success is the Golden Gap course. This is the road to success. Learn what to do, take step after step after step, and you do it. The class I teach is going to be on April 13th and 14th. The cost of the class is $19.99. It's a 2-day course. It's very intense. I do it in the weekends because I trade during the week. And it's called the Golden Gap. If you're interested, you can contact me at melissa@thestockswoosh.com. Sign-ups for this, people who are attending today, you get a special $15.99. You have to sign up by April 1st. That's the deadline for the special. If you want to do it, you get a discount for being here today, which I appreciate. Thank you. So you get a discount off the class. It would only be $15.99, the introductory price. I also teach another course. If any of you are interested, you can contact me about this. It's called Wealth Manifestation. I'm actually doing one tonight at 4 o'clock Eastern time today, but if you're interested, you can contact me about the next one. There's nothing in this class that has to do with charts. It's all about stuff that goes on in your head and your brain and your mind in reference to money and trading. The whole idea of gap fills makes people get excited because they think of something moving in a void and they're going to make millions and millions of dollars. The idea of making millions of dollars trading is absolutely possible, even as an individual, over time. Over time, as you learn what to do and learning it and getting it right. Trading is challenging for people in their minds. And I know this because I've lived it. Because when I started out, nobody told me this stuff. And then I lived it. And now I'm teaching it to people. And I'm a real live trader. And it's possible to make money trading. But the idea of just wanting to do everything like everybody else isn't going to get you where you need to be. So the gap fill thing doesn't work. You've got to trade in the direction of the large, large institutional money that is going to help you become wealthy. So they're not your enemy. Everyone says, oh, they took us out. Oh, they did this and did that. No, just read the chart. It's very simple. It's very easy. You can see what's happening, but you have to read the price action. And so this class really assists people in what's going on in their heads to change their thought processes, to realize that it is possible to be successful and wealthy as an individual trader. The big banks and all these people are not against you. They're helping you make money. Get on the side of them. And that will help you become wealthy. So thank you so much for letting me come today. I just want to be very motivational, tell everyone that you can have the life you want. Don't wait. This year is the year 2013. If you want to learn how to trade, contact me. I'd be more than willing to teach you. Thank you so much for having me today. Happy holidays to everyone. Happy Easter. Happy Passover. Have a wonderful week. Does anyone have any questions before I'm done? I think I'm done a few minutes early.
Melissa, Jerry's just got a question.
Sure.
I don't want to answer it for you, but where is the class being held?
The class is in an online setting. So you would sign up for the class and you get a special password to go. It's in an online trading room. I'm talking just like I'm doing now and presenting. I see you chat and you write and type your questions. I answer the questions for the students live that are all in the classroom. I've taught people all over the world. So it's not in a actual location, a physical location. It is on an online setting, and I find that's better for people to be more relaxed and study and pay attention, and also I can reach a larger group of people. So it is online in a special room. You get a password once you sign up.
And can you show your contact information one more time?
Sure. Let me go back to that. There, Melissa at thestockswoosh.com. And you can go to, I have a YouTube website, which is the Stock Swoosh. The Stock Swoosh on YouTube, I have a ton of videos on there, a ton of them. You can go look at trades I've done. I'm probably going to do the CLF one tonight, the trade I did in CLF, and boy, that was a whippersnapper today. And you know, I stuck with that thing, and the market did what I wanted it to do. I knew the market was going to pick itself up. This is another reason, talk about the market. I'm not going to bring up any live charts right now because I know John's going to kick me off, but the market gap down today. Based on technical analysis, it looked like the market was going to do trigger on a sell setup. It did. But it wasn't going to go anywhere. It came right down into support. And by the way, the market, the Qs anyways, I don't know where we're at right now for over 69, but we are going to get over that 69 because the market hasn't made a top on the Qs because we haven't gone anywhere. You can't be topping when we haven't gone anywhere. The Qs are a base. The Qs are sitting on a base at 69 right now. They're ready to break over the base. The Qs are not in a top. And the SPYs aren't topping either too right now, to be honest with you. The SPY is just in an uptrend. And the SPY, all SPY has been doing is just coming in, lifting, lifting, coming in, lifting. Any other questions?
Nope. I agree with you on your analysis there, though. That's for sure. And tell her passion they're going. So get a hold of Melissa, and thank you so much for being here again, as always. So.
Thank you. Thanks for having me, John. Have a great day, everybody.
Yeah. All right. And